Hey everybody, welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and we are heading into yet another week of GameStop low volatility price action. That really seems to be what's on the docket here. However, despite this, it does look like larger players are tipping their hand as far as what is governing our price action. What are the operative factors in forecasting how our price might move over the next few days? So we're going to be talking about that today, as well as looking at what we might expect this week within a broader market context, especially ahead of some of these impending tariff announcements with respect to the 90-day pause deadline. So that's coming up today. Before we get started, we will obviously start with our gratitude. Today's gratitude once again goes out to Thomas Tao Hay for sponsoring today's article and video breakdown, as well as to our monthly supporters, Not Medical Advice, Master, Let's Go, Cosmotropic to Swag 52, and Hey Lucky's, aka Faithless Suitor, for helping offset some of my data and publication expenses on a regular basis. So as we hop into things for today, I will say that it does seem like the operative element as far as what we are seeing in our price action, what is governing what's going on right on a day-to-day basis, does seem to be purely options with a little bit of interventive type shorting. So we've talked about this at a number of periods, previous videos. We've talked about it. We've talked about this on live streams, right? At different moments in time, there are different factors which act as the primary governing influences on our price action. So at times where we have, say, ETFs de-hedging volatility, or I should say sort of de-internalizing volatility, not de-hedging, but de-internalizing volatility, that tends to have a predominating effect on our price action, sometimes more so than what is going on just purely through the options market, although the options market never really stops affecting that. When we have bond offerings, right, I mean, just massive short volume has the predominating effect on our price action, or when we're going into sort of a price down phase, this kind of deeply internalize the volatility, deeply internalize what's going on in terms of price action in order to adjust the price downward, right? So, but we do have these periods, right, where we're not really seeing either, bond stuff has passed, we're not seeing large internalization. At the same time, we're not seeing large de-internalization. So, the market as a whole is rather stable, and therefore, right, nothing is really going on outside of these sort of normal options factors. So we tend to see GameStop go ahead and behave more so like what we would expect a small or a mid-cap stock that is not carrying GameStop's baggage, right, to behave. So Thursday was, of course, very interesting because we had a pretty typical trading day, and then very late in the day, all of a sudden, right, so this looked like a little repositioning. This looked like kind of a sell-off related to charm, so options decayed very quickly. And then right before the half day, it looks like we got pushed down in order to score that max pain finish. So whenever we see like conspicuous movement like this, so a bang the close exactly down to max pain, that's something that says, okay, really what was governing our price action here towards the end of the day was the option structure. I mean, that's primarily what guided us here. So this was largely options trades kind of pushing the price around, and then we got a little bit of interventive shorting to affect that weekly close there. So that does tell us that if we take a look at our options environment is going to supply us with an increased degree of predictive validity on what it would normally tell us about how our price is going to move, right? So obviously when we have these crazy high volatility or these, large price adjustment periods, it's very difficult to use the options environment as a tool with very high predictability, as a reliable structure governing our price action. So for example, if we were to pop over and take a look at our move out of January, right? So let's hop over to GameStop, right? Coming out of January, very difficult in here to use the options environment as a predictor, right? So we had a ton of, right, throughout here, we had pretty stable technicals, right, stuck within this kind of bullish regression channel. But then right around here, we started to price down. All of a sudden, right, all of these drops were essentially orchestrated, right? So options basically stopped being meaningful. We got shorted through key option support levels. Why, right? We were being adjusted by this sort of ETF extended liquidity type shorting. So not super helpful in this period, right? Not super helpful for telling us what to expect and how to trade off of this. Now, very different story in this period, right? Basically from midsummer, right? Basically in here, this got a little, well, this made sense actually. This dip was forecastable through the options market, but basically from June all the way into October, this whole move here was really kind of, with the exception of this small repositioning here ahead of earnings, this entire period here was very regular with respect to what we would anticipate from what the options market was telling us, and what we could anticipate with respect to changes in volatility. This period, not so much. This period, a little also difficult. This one was a little bit more difficult. Some very unusual options trades. Really, this kind of bull shape here was rather difficult to anticipate with respect to options. This spec here was kind of, what would you say? It was very highly predictable. It was very excellent. So what it does appear is that we are and have moved back into an environment, a trading environment that does seem governed, or predominantly governed by what is going on with our options activity. So that can be helpful. I mean, that can be sort of, it can be difficult at times to anticipate when that type of environment will change, when we'll have something exterior sort of inject itself into our current price action system, into that closed system. However, it can be very useful when trying to anticipate what will be, let's say, most profitable or most predictable in terms of shorter term options trades. So with that being said, right, we do have some risk of something external kind of coming in and disrupting this setup really in the first half of this week, and that's what's going on with tariffs in the broader market. So obviously SPY looking great, charging to all-time highs, really looking kind of overextended in terms of, this move, especially where it's just day after day after day of green, new all-time high, breaking this all-time high here. These momentum indicators kind of getting pretty close to each other. All of our moving averages pretty decently well below us. It does look like we would get some consolidation, a retrace into a consolidatory period at minimum. If we look over at our options environment with respect to SPY, we can see that, yeah, if we go ahead and open beneath 625 and don't, like, say, immediately go reclaim 625, then we'll enter into this kind of a little bit more slippery period, little hang up around 620. But bearishness should start to set in around here. And if we push through 620, we do see volatility, right? So we can see put GEX dominance start to ramp up, which in SPY means increased volatility. Stuff gets a little bit more slippery. Volatility comes up a bit. Now, it doesn't necessarily mean collapse, but it does point to, options positioning does point to an attempt to capture some of that potential downside move there, some of that retrace, back into, say, the lower 600 levels there. It does look like, for example, we do have, the White House, for example. What is this rapid response here? 47, talking about, was this Bessent, Secretary Bessent right here, talking about getting some deals announcements over the next 48 hours. So this is going to be used as an excuse to go ahead and rock the market. I would not be surprised if these are then used as the catalyst triggers to go ahead and let this volatility realize. I mean, I think it was the plan to build up volatility positioning into this week, possibly even into really, as we'll see in a second, out into August, to take advantage of these catalysts, right? So the idea is, okay, this catalyst is coming up. Let's set up this volatility positioning. And then when the announcement drops, then the major institutions will go ahead and pull the trigger and let that volatility realize. So we can see that basically in place here in the options market. We can see that across all our expiries on a per strike basis, and we can see how that volatility will ramp up as we continue to trace down if we do end up opening below 625, which it looks like we will do. As we take a look at our expiries, however, if we go out, they largely say something similar. It's not crazy bearish, right? It's not March or April, we're going to fall to pieces levels of potential volatility anticipation. But we can see that kind of heading out, really even heading into today, we do have slight volatility skews heading into the 11th, heading even into basically our daily and weekly expiries just prior to July OPEX. I expect too that once we trace enough to the downside, that is going to end up skewing towards July OPEX based on the gamma values, right? So as like the put positions at things like 615 or 610 or 605 move into the money, especially in that kind of 600, 605 area, we are going to see July 18th OPEX that is going to skew more towards volatility there. We also have quite a bit of positioning out into August OPEX. So although there is a brief kind of reprieve here right now, slightly over out into the 18th, this may end up, depending on how these announcements turn out, something of a 6-week period of consolidation until, that would position us pretty well into FOMC. So we'll actually have announcements regarding rate cuts on the 30th. So that'll be the next Fed target date there. They'll let us know. I think FedWatch has us estimating about a 20% chance of a rate cut, 25 basis points. When we get cuts, GameStop has typically moved pretty bullishly. So as does the market, right? Because we get inflow into equities. At least historically, that has been the case. If we don't get a cut, then it gets pushed out to September, and then maybe we stay kind of flat into flat and down, maybe into August OPEX, and then coming out of August OPEX, the assumption, right, the feast of the assumption, we'll start moving back up, back to the upside as we get ready for GameStop earnings. So we'll have probably one flat week, but then 29th. Already GameStop, I think, is the 9th. I think Q2 earnings. Q2 earnings will be the 9th. So we'll have two expiries. We'll have the 29th and the 5th will be expiries prior to Q2 earnings. So at the very latest, we can anticipate that as being a date where some volatility will return into GameStop. Q2 earnings possibly going to look very, very good. We'll have Switch 2 sales being reported there. Obviously, we'll see what's going on with PSA, how numbers are going as far as card trading and such. We'll see what's going on, maybe with the push to start arcade too, and how that's going to go. Right, had some sort of leaks with respect to that. Leaks with knowledge that has to do with that, and possible endeavors there to get people. Spending money at physical locations, spending time at using GameStop as a hangout to play games rather than just going to purchase merchandise. So very, very interesting there. So what are we looking at in terms of, that's right. If we do see a retrace in the broader market, if we do start to consolidate, we may see, something of an attempt at a breakout here for BTC. We do have the makings of a bullish PMO cross. We had this kind of knock on all-time highs here, this 1, 2, 3 move. So we may be setting up to also start to move inverse of the broader market in Bitcoin as a result of whatever's going to happen in reaction to these tariff announcements. So OI-wise, it really looks like traders Well, really, they were really focused in the very near term. So a lot of positions, a lot of calls open, predominantly short at 24, a decent block at 24.50, another large block at 25, predominantly short. Some long, not that many in terms of long puts, really not too much put activity in general. But really looked like a majority of trades were concentrated at the money to take advantage of this charm. Well, it'll be some charm, but basically delta loss via the theta effect coming out of this 3.5 day weekend. Little risk in there, given that we were once again back at a new all-time low in terms of IV heading into the end of last week. But that looks like what predominated in the options market. Some interesting long positions here. A smaller block, but skewed bullish at 23.50. Decent block here, a very sizable block. Almost all of these new 5,000 calls were skewed toward the ask up at 26. So, interesting to take note of. Another interesting bit to take note of, however, is really nothing. Ghost town going into July OPEX, not a lot of activity there. Surprising, I suppose. But looks like for the meantime, it still looks like we are looking at kind of trading around this kind of 23.50 to 25 area. Maybe we get a test, of a 25 level if maybe we get a little bullishness in Bitcoin, something like that. Max Payne's still sitting at around 23.50. Whoops. Still sitting at 24 for next week. And our gamma environment also not looking too different, right? We've still got this really tight bracket here, which it looks like, we could open up toward the beginning of this week, kind of move up and again, kind of ping pong around in this very, very tight bracket while basically everything else expires worthless. Puts to our downside here are mostly bid skewed. So they are volatility dampeners. Not a lot of, right? We don't have a lot of room to the downside. Maybe we do slip a little bit, especially if we get some bearishness in the broader market. It's hard to say at this point. There are so many moving factors, moving components now versus, say, predicting what this was like last year. But really, I would say once again, very similar to what I said at the beginning of last week, if we're taking a look, we're seeing how much options are predominating. We're seeing, not really too much in terms of any kind of big news or any sort of catalyst for GameStop in the near future. That the immediate term, what's looking like is the case is that our options environment is basically going to guide us into the end of the week for a close, right in this pocket somewhere, maybe driving that 24 position out of the money ever so slightly, but basically looking at a close, maybe something similar to last week, right? I'd love to be surprised. I'd love to see things develop this week. Maybe we do get a little volatility injected as we see the broader market destabilize a bit. We'll have to see what that ends up looking like at this point. Can't really say exactly what the effect would be on GameStop, but that may introduce something a little bit different that can be kind of our wild card on price action this week. So obviously, another conservative outlook from me this week. I think, we might just have a very, very boring July. Might not see much in the way of de-internalization. It depends really what's going on in the background, with institutions, what's going on, say, with this ETF stuff. But, it depends how much of that stuff they really cleared basically as a result of the bond offering. So we are in a down cycle, right? We are on this kind of what otherwise would be an adjustment of the price downward. It's just we already kind of did that and already sold off our volatility over the span of a few days. So might just kind of be sideways. Maybe there's some kind of swap repositioning stuff while the company gets ready for Q2 earnings. But we might have another kind of dog days of summer into August 15th, which is right, I think the end of the dog days of summer, and the Feast of the Assumption. So that's it from me today. Looking forward to seeing how this week develops, even if it's a bit sideways, right? Always an enjoyable ride with GameStop. So looking forward to seeing you guys tomorrow. Looking forward to seeing everyone as well at this Friday's live stream. We had a great time last week on Thursday. Definitely check that out. That is linked The recording for last week's live stream is linked down in the description of this video. So very much looking forward to seeing everybody, tomorrow and at this week's live stream. And all in all, have a great week. Good luck with your trades, and let's go GameStop. Thanks, everybody. We'll see you.